Hello everyone. Welcome to day 5 of APM Revision Revolution. So yesterday we stopped at the A part, which is explain the growing emphasis on non-financial performance indicators for a business such as GA, that is Glenn Associates. So basically we were doing this mock paper wherein yesterday we completed the section A part of the mock and we started with section B question 1, whose A part we completed yesterday, which is explain the growing emphasis on non-financial performance indicators for a business such as GA. So previously what used to happen is the investors were more interested in the profit, like how much profit the company is making, what is the earning per share, what is the gross profit ratio, what is the net profit ratio, what is the operating profit ratio, what is the gearing ratio, what is the debt equity ratio. That is, they were more concerned about money. But at that time the investors, we cannot blame because there was limited knowledge available in the market. But now the investor is quite educated in the field that he understands that profit is not the only thing you should look for when you're investing in a company. Yes, profit is one of the aspects that you can look at when you're investing in the company, but along with profit there are some other aspects also that needs to be considered. Now what are these other aspects? So for example, if you have a business, so how much repeated customers do you have? Can judge if your quality is good. So if your quality is good, your price is competitive, then you can have repeated customers. So that is like a success factor for you. Okay, but this is a non-financial performance indicator because obviously this doesn't have anything to do with the profitability of it. Then you're selling a product. How many complaints do you get? Customer complaints. If you're getting less customer complaints, that means your product is 100% good. The lesser the complaints, the more better your company is, the more better your product is. So these are some of the non-financial indicators that now the investors consider because they feel that just looking at profitability isn't enough, because obviously the profit figure is not the real cash flow that you have. So you can always play around with the figures. It's like a figure which is not real because profit figure can be window dressed easily. So investors think instead of just looking at one aspect, that is profitability, let's look at some other aspects also. And this realization has come with a lot of education, has come with a lot of experience to the investor. Okay, so that is why the A part says explain the growing emphasis on non-financial performance indicators for a business such as GA. And what are the emphasis? We've already seen. So that means now the investor knows and now the investor understands the aspects, and he knows that yeah, looking at financial indicators is important, but along with that you also need to look at the non-financial performance indicators. Then the B part of it says using only the information provided, produce a range of non-financial performance indicators under each of the following headings. So under each of the following headings, you have to provide a non-financial performance indicator. So for competitiveness, so yesterday we saw what can we do for competitiveness. For competitiveness, how much new business we are getting. So here actually the amount has to be how much new business we are getting, that is from new customers, how much repeated business we are getting from our existing customers, that will tell us how competitive we are in the market. Then number of service contracts, number of installations can give us an idea about the competitiveness of the business, right? So number of service contracts last year was 15,890 and this year it is 18,890. So there is a growth, right? So how can this growth be justified? If there's a growth, then that is the competitiveness of it. Similarly, the number of installations last year was 8120. This year in 20x5 it is 9635. So then again there's a growth. So this growth justifies with competitiveness. So we can write about that. The B part, and of the B part, the first part is competitiveness, right? Competitiveness. So write down the heading. You want to measure the competitiveness. And in this, how can you measure the competitiveness? Because they have told us to measure via non-financial performance indicators. So the one way of measuring competitiveness is total client inquiries that have turned into contracts. Means what happens is some people just inquire and they don't give you the order. So when you have a business, when you have any kind of business, it's not like if you get an inquiry means you 100% get that business. How you address that inquiry depends on if you get the business or no. So what is the success rate of this? Inquiries you can have 100, and out of that 100 inquiries which have turned into contracts can be 80% of it. So that is your success rate of getting the clients, the way you talk and the way you show them things that this is what we provide, this is what we cater. So that can attract the client. So that is a competitiveness strategy. So percentage of inquiries turned into contracts. Herein we have two categories of it. The first category is the new business. So total inquiries for new business, we got 4230, and out of it the inquiries that turned into contracts were 3005. So 3005 divided by 4230 into 100 means you have a success rate of 71%. So write down the first one for the new business is 3005 divided by 4230 into 100. That is equal to 71.0%. Okay, this is your success rate. And then for repeat business, is how much? Again, the total inquiries you had was 1840, and out of that inquiries which turned into contracts was 1510. So 1510 divided by the total inquiries 1840 into 100. So out of 1840 you got 1510 contracts. So your success rate here is 82.07, that is you can take 82.1%. So it is 1510 divided by 1840 into 100, which is 82.1%. Okay, this is the competitiveness pertaining to percentage of inquiries turned into contracts. Now you have to explain a little about this. You cannot just leave it mathematically calculated and let the examiner guess what is the moral of the story here. So you have to explain the examiner the moral of the story here. Okay, so what is the moral of the story? This indicates how competitive GA, that is Glenn Associates, is at winning new contracts. That means for new business it has a success rate of 71.0, and for repeat business it has a success rate of 82.1, which is very good at winning new contracts from both new business customers and existing customers. In particular, because you have to explain why you have undertaken this calculation. You don't have to leave the examiner guessing at any point of time. You have to always explain why you have done this calculation. The percentage of new business is a useful indicator due to strategic objectives of increasing the customer base. Okay, this is the first part. Now you measured competitiveness by percentage of inquiries turned into contracts. So how competitive your business is. You can also measure it by increase in the number of contracts. So last year, for number of service contracts, you had customers 15,890. This year you have 18,890. So your customers have increased. So you are giving a competition, a tough competition to your competitors. So this can also be one of the other factors by which you can measure competition. Similarly, for number of installations, last year the installations was 8,120. And this year the installation is 9,635. So again your installations has also increased. Again, you're giving a tough competition to your competitors. So next thing that you will write down is, this was one, competitiveness. Next will be increase in the number of contracts. Okay, that is the next thing that you can look at, that is increase in the number of contracts. So these two indicators can tell you about competitiveness. Okay, so how will you measure that? First of all, there are two categories. The first one is service. So you know how you measure growth, right? So it is 18,890 minus 15,890 is 18,890 minus 15,890 divided by the previous year's. That is how you will get the growth, 15,890 into the whole into 100. That is going to give you how much? 18,890 minus 15,890 divided by 15,890 to 100. The growth is 18.9%. Yes. And for installations, again 20x5 minus 20x4 divided by 20x4. Whenever you're measuring the growth, it should be divided by the previous year. So it is 9635 minus 8120 divided by 8120. 9635 minus 8120 divided by 8120 into 100. 635 minus 0 divided by 8120 into 100. So So the growth is 18.65, you can say 18.7. So that many new customers you have got in a year. So isn't that great? So again you have to give a analysis of this, because the examiner doesn't know why you have calculated this ratio of increase in the number of contracts. So you have to explain that. This gives an indication of growth in the business rather than simply considering growth in turnover. So this is the growth in business. The breakdown between service and installation contracts provides management with information about which section of the business is more competitive. So this was regarding the competitiveness part. The next part we have is what? However, you can also write one more paragraph to it, that is, it is surprising that service business has increased greater than at a greater rate installations, as it is expected that new installations lead to an increase in service contracts thereafter. Glenn Associates should see service percentage rise in future periods, or may be incorrect in believing that service business automatically follows from an installation. Okay, so this is regarding competitiveness. Now the next one we have is regarding resource utilization. How will you measure resource utilization? How much resources? So what are the resources that you have? Engineers, you're employing the engineers, and the usage of this engineers employment is your resource. So what can you take in this category? Chargeable time, no. Number of service callouts for engineers, and out of that, for number of service callouts for engineers, the service, your callouts are 14,320, and for this the total number of engineers that you have for service are 95. So 150.7 number of service callouts per engineer, because you have 95 engineers employed for service and the number of service callouts are 14,320. So how well you are utilizing the 95 engineers employed for service? 150.7 number of service callouts per engineer. So that is, engineer is your resource and how you are utilizing that is your resource utilization. Write down the second one. That is resource utilization. And in resource utilization, you have number of service callouts per engineer. So per engineer is getting how many service callouts? The total service callouts are 14,320 and the number of engineers employed in service are 95 engineers. So what is the callout? It is 150.7 per engineer. Okay. So what does that indicate? This indicates the productivity of the service engineers. Productivity is an important aspect of cost control. How productive you are, the more productive you are, the more proper utilization of resources, that is also a cost control strategy. As the salaries of the engineers will be fixed cost of the business. The more service callouts made by each engineer will reduce the salary cost per callout and increase profit per callout. This is one way of measuring the resource utilization. What is the next way of if you are using the resources accurately or not? These are the total engineer hours. For installation is 68,300 and for services 2,13,750. And these are the chargeable time of engineers. So the rest of the time is the idle time, so that we cannot consider. So percentage of chargeable hours to total hours we can take. So 62,830 divided by total 68,300 into 100 and 1,66,790 divided by 2,13,750 to 100. That is chargeable hours divided by total hours. So that will give you like the percentage of chargeable hours, like how much they are charging to total hours, and then whatever the difference is the excess, that is the idle time, you can say. So percentage of chargeable hours to total hours. installations is how much? 62,830 divided by total 68, how much? 300 into 100. And for service, it is service 166,790 divided by 213,750. So for this installations, it will be 62,830 divided by 68,300 into 100. That is 92%. And for this, it is 166,790 divided by 213,750 into 100, which is 78.03. 78.03. Okay, so whatever is the difference, like for installations, the remaining 8%, and for service, it is 22% approx. That is the ideal. Okay, so then again you have to state and write an explanation of this because we don't want to confuse the examiner. So write down again, this indicates the productivity of each type of engineer as above. The greater the productivity, of engineers, the lower will be the cost per installation. And the cost for service. Glenn Associates has a strategic objective to control costs in order to encourage sales without increasing prices. It is not possible to assess this completely as no comparisons are available. So you don't have one more company's data, right, to compare yourself. You can only compare with your previous year to this year, inquiries to installations to services. You don't have somebody else to compare. So no comparisons are available. Other than to suggest that control seems to be more tightly enforced on flexibility, then Glenn Associates will need to accept some spare capacity. In installations it's just 8, but in service it's 21, approx 22. So it will need to assess, and it will need to accept some spare capacity, and this may be greater in the service part of the business. Care must be taken when setting standards in this area to ensure that over efficiency does not impact quality. Okay, so again this is an explanation of this. Now some of you might have doubts regarding these calculations that we did here. Should we do it on Excel? See, now these are very little calculations which don't require a format. You can just type it and just do it on your calci and just get it done. So no need to separately do it on Excel, because what will happen is these are very small calculations. You do not have to make a table or something, right? So it can be incorporated on Word also. But if there is like a table which we had in section A, like a proper complete table, then you can do the calculations on Excel. Otherwise it's not needed, because these are very little calculations so you're doing the calculation, writing something about it, you're doing the calculation, explaining, and the calculation is not very huge also. It's a literal one line calculation. You can always do it on Word. Okay, then the third category that we have is competitiveness is done, resource utilization is done. The next one we have is quality. Third one is quality. So how can we measure quality? First of all, I can only think of customer complaints for quality. So the lesser the complaints, the better is your quality. Number of customer complaints, right, for installation is 934 and for services 1250. Number of customer complaints, you can check it as a percentage of contracts, right? We can measure installations customer complaints 934 divided by total contracts of customer complaints that we total contracts of installation that we have. So this is a recent data of 20x5, because this data is of 20x5. So installation 934 divided by installation ka latest 9635. So of the number of installation, the total number of installation this year were 9635, and out of 9635 you had a problem in 934 because the complaints were 934. So 934 divided by 9635 into 100, that means the number of complaints were 9.69, that is 9.7%. Similarly, the number of customer complaints for service was 1250, and the number of service installations, the number of service contracts this year was 18,890. So out of 18,890 you have 1250 problematic ones. So if you calculate, you get 6.6. So that is how you can measure quality. So how will you measure quality? Customer complaints as a percentage of contracts. Installations, you have what are the complaints? 934 divided by total installation for this year 9635. So you have 934 934 complaints divided by total installations 9635 into 100. So that is 9.7%. And for service contracts, you have Problematica 1250 divided by 18890. That will give you how much? 6.6. This shows the level of customer satisfaction with the work carried out and indicates the quality of the work of engineers. So that is how the quality you can judge, because the complaints are only 9.7, so the remaining is good quality. In service contracts, the complaints are only 6.6, so the remaining is 94 is good quality. In a service industry such as this, quality of both the products and the service provided is of vital importance in retaining and attracting customers and the directors of Glen Associates recognize this as a part of their overall strategy. Okay. These measures can also be linked to repeat business and growth. How much people are coming back to you also depends on your quality, because if you have repeated customers, that means customers are somewhere liking your products, that is why they're repeating. As measured in the first part above. Installations have a slightly lower growth, higher productivity, and higher complaints than service. The directors may need to prioritize these objectives as they appear to be in conflict. Okay. Time to reach the client means you're trying to call or you're trying to email. So the total time to reach the client is 3.2 hours on an average. And the time between initial inquiry and installation means I inquire first, then I like your product, then I tell you, okay, fine, I'm in for it. Ajao and install it. So that time period, that is the processing time, takes 5 days on an average. So what can you say about that in terms of quality? Time to reach client is how much? 3.2 hours on average. And time between inquiry and installation is how much? 5 days on average. Right? That is what we just saw. So what can you say about these matters? Both of these indicators are important factors because the time to reach the customer, that is via phones, maybe they are not picking up or what, is also important. And once you fix that, okay, you want to go ahead with Glen Associates, once you give the contract to them, they take 5 days to like install and all of that. So both these indicators are important factors as customer will assess Glen Associates not only on the quality of their product and of their engineers, but also on the speed of dealings with problems and getting a new installation in place. Again, as above, these ties in with the strategic objectives of providing the highest quality of service. These indicators may also suffer if too much pressure is applied to resource utilization. Okay. This completes the second part of the answer. Now the third one says, in the context of managing director's request, briefly explain the dimensions of performance and explain how the dimensions link to standards and targets. What is the managing director's request? The managing director has provided you with the data about the company's performance for the most recent financial year ended 31 March 20x5. That is what we just saw in Appendix 1. Glen Associates engineers receive a performance-related bonus which is currently based on the company's net profit. the managing director is also considering including non-financial indicators in the engineer's bonus scheme. The manager has suggested using Fitzgerald and Moon's building block model, which was also mentioned on the course he attended, as a framework scheme. Explain the importance of in the context of managing director's request, briefly explain the dimensions of performance and explain how the dimensions link to standards and targets. So basically you have to use Fitzgerald and Moon's building block model. So that is the C part of it. So Fitzgerald and Moon's model highlights that performance dimensions need to cover two general areas. And what are the two areas? Results and determinants. Okay. What are determinants? Determinants are the factors that influence a company's results. Okay. The quality of Glenn Associates engineers how efficiently they are used and the speed with which they can respond to customers' needs. Are all determinants that could all influence Glenn Associates' competitive and financial performance, right? However, the building block model highlights that the standards and targets against which performance is measured are important elements in developing a performance measurement system. Right? Now, how will you know this building block model? It's a completely theoretical independent question which you don't have to read the question to answer. You just have to relate it with the question. So this is a complete theory question. The standard are the target levels for specific measures chosen for each dimension appropriate to an employee's performance employees must take ownership of the targets so they need to be persuaded to accept the target and be motivated by the targets. A key question for the MDer will be how to persuade the engineers to accept the new targets which their bonus is based on. So when you're setting the targets should not be very unrealistic. Like, I want to get 100 marks, or something like that. Your targets should be realistic and achievable. I want to get 90, I want to get 95, achievable. Because 100% is very difficult. Yeah, some of them can get, but then to write 100% according to the will of the examiner is kind of a little difficult. So your targets must be realistic and achievable, knowing your own personality, that okay, according to the person that I am and according to the hard work that I have done, I feel that I might get somewhere around 80 to 85. This is having a realistic target. Okay, so targets must be achievable, and so challenge the employee without being viewed as impossible to achieve, and therefore demotivating. For example, if any measures are included about the number of callouts, an engineer attends this must be realistic and must also reflect that rushing to finish a job quickly could be detrimental to quality. Fitzgerald and Moon's model highlights the achievement of standards and should be supported by rewards. And an important factor in this respect is controllability. For example, the engineers may not be able to control the time taken to reach the client, because what will engineers do in that? That's the time taken. If you pick up the call, they will reach faster. If you don't, as such, the statistics currently reviewed may not be most appropriate for using as the basis for the engineer's bonus scheme. And finally, last paragraph, that is the closing paragraph. Finally, targets must be fair. As I told you, don't have don't have unnecessarily high targets which are not achievable. However, that doesn't mean that you have very low targets which are easily achievable. Give yourself that little boost. Challenge yourself. Don't keep very low targets. Okay, I will get 50% marks and pass. This is a very basic target. Keep something that you can challenge yourself to make it. I want to get 75. I want to get 80. Challenge yourself. I want to get 85. So like that. While targets should be challenging, if the engineers end up getting lower bonuses under the proposed schemes that they did under the old one, they are likely to view this as unfair. As important consideration here should be whether it is only the engineers whose bonus scheme is being revised, or whether similar changes are being made to other areas of the business. Okay, so this is what is the Fitzgerald and Moon's model about. So please go through it, see if you guys have any doubt. Till then, I'll quickly check the comments. Before beginning the next question, we take a break of 5 minutes. Okay, so this was the section B question 1. This is the section B question 2, which is the total of question 3 of the paper. EI, Edwards Incorporated, and we always start with the requirement. So this is the requirement, and these are the present value tables that will be given to you in the examination. This is the annuity table, and that is for self-assessment, that is checking your own mock. Guidelines for checking your own mock. Okay, so required A, first one, calculate both the return on investment, that is ROI, and residual income. ROI formula everybody might know, it's already been taught in class. And residual income for the first year of trading of this investment. Explain whether the manager of TT is likely to invest in this project and whether the board of EI would agree with this decision. Calculate the economic value added of TM of this investment for the year of trading, and comment on the investment opportunity for the viewpoint of both the group and the manager concerned. Assume the economic depreciation is the same as accounting depreciation charged against income. Normally the both are different, but in our case they've clearly said that both are same. So both are same, so same. Here there are no professional marks because this is a mock paper of 2019, but since September 2022, for every 25 marker, 5 marks are professional, and for every 50 marker, 10 marks are professional. Okay. Discuss the view that divisional measures such as residual income and economic value added fail to take account of liquidity and gearing as key aspects of performance, and suggest how liquidity and gearing could be monitored at divisional level within a company such as EI, that is Edward Incorporated. With reference to the 5S model of lean principles, you should know the 5 S's. Evaluate the extent to which the new warehouse manager's process will make the process in TT's warehouse lean, and this is for 8 marks. So first, starting with reading the question. First of all, the company background of the company of Edward Incorporated. Edward Incorporated is a multinational diversified business which operates on a divisionalized basis. The manager of each division of EI is responsible for capital investment choices within a capital budget set by the board of EI, and is paid an annual bonus related to the average return on investment ROI of the division for each accounting year. Edward Incorporated has a weighted average cost of capital WACC of 10%. The TT division. TT is a division of Edward Incorporated which provides equipment to the building trade. The manager of TT is currently assessing a project to open a new superstore to sell equipments. The project has an initial cost of $1 million, will last for 4 years, and has no residual value, and has a positive net present value of $0.35 million. The profitability of the project in the first year will be, revenue will be 800, cost of sales will be 380, gross profit is 420, then expense, wages is 120, advertising cost is 40, depreciation is 140, so profit before tax is 120, tax is 30, and net profit is 90. TT currently has a return on investment of 15.8% based on average investment. It is estimated that at the end of the first year of trading, the replacement cost of the net assets of the investment will be $1 million. The managing director of TT division is looking for investments to stabilize the financial performance of the division, which has been variable in the recent years due to changing economic conditions and fluctuating sales demand. Then about warehouse. TT has 3 warehouses in the country in which it is based, and which stores all the equipment and products TT sells. Some are sold through third-party superstores, but TT also supplies its larger trade customers directly. The performance of one of the warehouses has deteriorated recently, and number of deliveries of trade customers have either had items missing or have included incorrect items as staff have had problems locating the current items. One of TT's largest trade customers has threatened to cancel its contract with TT if performance does not improve. A new warehouse manager has now been appointed, and he believes that the process for sorting goods in the warehouse had been responsible for many of the problems. When inbound deliveries from TT's suppliers were received, products were stored in the nearest available space, which could be on the warehouse floor if there was no space available on the shelving unit. The warehouse manager has now instructed staff that all products coming into the warehouse must be stored in an appropriate place on the shelves within 2 hours of delivery being received, and none may be stored on the floor. To assist this, the manager has introduced a policy in which all products should be stored in order of their alphabetical description, with products with names beginning from A being shelved nearest to the warehouse entrance and those beginning with Z furthest from it. The manager has also implemented a policy in which RFID tags are applied to all products as they are received into the warehouse. The information from these tags automatically updates the warehouse inventory management system. Alongside this, the warehouse manager has begun carrying out spot check inventory counts to check that the volume of a given product in the relevant shelf space agrees to the number of inventory management system. So, the A first part calculate both the ROI and residual income, that is RI. ROI and RI for the first year of trading of this investment, and explain whether the manager of TT is likely to invest in the project and whether the board of Edward Incorporated would agree to this decision of the manager investing in this project. So first of all, we have to calculate the ROI and RI on the basis of the financial data that is provided to us. So A first one is the calculation of return on investment. Return on investment. For that, you need opening capital investment. Is how much? Then you need closing capital investment, and from this you can find out the average capital investment. Okay, so from opening and closing capital investment you can find out average. So what is the opening capital investment? Initial is what? 1 million. Right? WACC is 10%, and profitability for the first year is this. ROI is 15.8. After first year, the replacement asset will be 1 million. And the managing director of TT is looking for investment to stabilize the financial performance of the division, which has been variable in the recent years due to changing economic conditions. So closing capital invested is 3/4 of opening. So closing will be into 3/4 is equal to, that is 75%. So that will be, so average is how much? That will give you how much? So we got closing capital, ROI, investment upon closing capital into 100. Our investment is 1,20,000 divided by average into 100. So that is how much? $13.71. So 13.7. This is the ROI. And along with ROI, what do you have to find? RI. Residual income. And for residual income means what? Profit before interest and tax minus interest cost on average investment. That will give you RI, that is residual income. So what is profit before interest and tax? 120. Then interest cost on average investment is 87,500. Therefore RI is the subtraction of 87,500 from 120. That will give you minus 87,500, 32,500. This is RI. ROI is 13.7 and RI is 32,500. The return on investment of the project in the first year is only 13.7%, which is lower than the current return on investment for TT of 15.8%. Therefore, the manager of TT is unlikely to invest in this project because the return on investment has become lesser than the current investment of 15.8. So as it will reduce his division's return on investment in the short term, and therefore affect the amount of bonus which he will be paid for this year. However, the project has an overall positive NPV of how much? $0.35 million, and has a positive residual income in the first year of how much? 32,500. Both of these measures mean that the investment would be suitable for the company overall, and therefore the board of directors of EI, that is Edward Incorporated, would want TT to invest in this project. Then what is EVA? Do you know what is EVA? Economic value added. How is economic value added calculated? Net operating profit after tax less capital charge. So EVA is equal to net operating profit after tax less capital charge. And what is capital charge therefore? Capital charge is what? Now these formulas are not written anywhere. These are from your past studies which you have studied in the chapters. Capital charges WACC, which is given to us, I think it is somewhere around 15%. No, sorry, 10%. So it is WACC into EV of net assets. Okay. So now here also there's a little bit of calculation. It's just 5 lines, so you can do it here only. So it is, the calculation is in thousands and it is in dollars. Profit after tax as per the question. What is profit after tax as per the question? 90. Next, add back advertising cost. How much is the advertising cost? 40. Net operating profit after tax. will be how much? $130. Value of net assets at the start of the period. What is the value of net assets at the start of the period? Depreciation is 140. 1 million, so it is 1000. Okay. At 10% charge, which is the WAC, 10% is how much? 100. So that 100 will go outside. This 1000 is not inside. 1 second. And then economic value added. So what is economic value added? 130 minus 100, which is 30. That is the economic value added. As the economic value added of the investment is positive, the manager of TP should conclude that the investment will add to the wealth of the shareholders. This can come negative also, na? And therefore should be undertaken. The board should concur given the net present value. RI and economic value added are both measures of financial performance and position. Both can be used to assess the value created by an organization during a period and can be used to measure the historical performance, like what we just calculated, or to budget or forecast future performance. Okay. Similarly, both are measures of the success of the organization in achieving the overall financial objectives of the organization. Which are generally related to profits and returns. So if the profits and returns are good, you will obviously want to invest in that company, because if you're getting a little more money, then why not in your business? And what's the next thing that you can consider? So this becomes your 1 and 2 part of it. Then moving towards the B part, which says discuss the divisional measures such as RI and EVA added failed to take account of liquidity and gearing as key aspects of performance, and suggest how liquidity and gearing could be monitored at divisional level without the company, such as EI. So now let's write that. Liquidity and gearing are measures of financial condition, right? Sufficient liquidity and an appropriate level of financial gearing are necessary conditions. This is a complete theory one for survival and financial security. But the thing is that they do not contribute directly to overall financial objectives. Although liquidity and gearing can be measured retrospectively using historical data, they are more useful as forward-looking measures. An organization needs to be satisfied that it will have adequate liquidity and suitable gearing in the future. There are several ways of measuring liquidity. Historically, liquidity can be measured by a quick ratio, current ratio, and cash cycle. Looking forward, liquidity is perhaps best measured by free cash or by means of a cash budget or cash flow forecast, right? How will you measure operational gearing? Operational gearing can be measured. So basically you have to write the formula of it by the contribution upon the sales ratio, which indicates the rate of change in contribution or GP, that is gross profit, as a result of a given change in sales revenue, right? TT division has volatile annual sale. Volatile means it is very unusual. It keeps on changing. It rises quickly, it falls quickly. So it is a volatile, aspect of annual sales. Revenue and operational gearing is therefore significant as a measure of change in profitability resulting from a change in revenue. Then financial gearing. This was regarding operational gearing. So financial gearing is not a useful measure of financial condition at divisional level unless specific amounts of long-term debt are attributable to the divisions. Financial gearing measures changes in after-tax profit in response to change in operating profit. But usually measured at the level of organization as a whole. So that finishes your part B, which is why liquidity and gearing ratios and how do they affect this operating gearing, financial gearing, and all of those parts. Then coming with C part, and in the C part they have clearly told you to give the 5 S's. So this is a complete theory question again with reference to the 5S model of lean principles. Evaluate the extent to which the new warehouse manager's process will make the processes in TT's warehouse lean. So the 5S models, what are the 5S models? You should know. It is structurize, simplify, sanitize, standardize, and sustain. These are the 5S models, and using the 5S models you have to answer it. So let's see the 5S models. The 5 S's are structurize, simplify, sanitize, standardize, and sustain. And we can apply these to warehouse reorganization to evaluate the extent to which the new managers changes make the process in TT's warehouse lean. So first one is structurize. To structurize is to sort things. So S. Structurize or sort. So this involves prioritizing the most important items so that they can be used easily. That is, we saw from A to Z. So A put it here forward, Z put it back, or vice versa. In this case, structurizing is likely to be arranging the products in a way which makes the outbound logistics process as efficient as possible. So in the question, like they've said, you have to do it from A to Z, like that. So they've also given an example of that, is although in the question, the new warehouse manager RFID system makes finding products easier arranging the products by alphabetical order actually won't necessarily organize the warehouse. In a way which is efficient as it could be. For example, the new process that is arranging it from A to Z. So the new process doesn't take account of how frequently products are used. So what it is doing is it is keeping it in it is keeping it in alphabetical order of A to Z, but it's not checking the frequency. If I know that I have a shop and I have a shop in the area where there's a school, so I know in that particular area chips, chocolates are something which is very frequent, so I'll keep it ahead so that people, when they see it also, they will feel like buying it. So when you see such chocolates, you feel like let me buy it, so I'll keep it at display. Okay, if my shop is in an area where there are a lot of old people, say around an old age home or a center for old age people, so I will keep all the medicines, all the old calcium tablets or things like that on display, so that when they see it, they remember it, they buy it. Okay, so here it does not take into account how frequently the products are used. The frequency of the products is not considered only. Just because it's starting from A to Z, you're keeping it on display, but you're not even thinking that people want to buy the product starting from A or they would want something else. So the frequency is not considered at all. Then after structurize, you have the next one, that is simplify. Or systemize. The principle involves organizing items to that such that they can be found easily. The new RFID system should help staff locate products more quickly and easily, and should therefore reduce the problems which staff have had in locating items. Okay, as such, the new process appears to demonstrate systemize characteristics of lean. Then simplify is done, structurize is done. Next is what? Sanitize. Sanitize means not literally spraying sanitizer on the products. Sanitize means to arrange well, to declutter things. So, sanitize. This principle means to be tidy and to avoid clutter. The rule that all products must be sorted on shelves rather than left on the warehouse floor specifically helps to keep the warehouse tidy. Okay, this is sanitize. Then after sanitize comes standardize and then sustain. What is standardize? Setting standards, right? The principle involves setting standards to help keep the work environment sorted and simplified. The rule that products must be stored in their appropriate place within 2 hours of delivery being received provides a specific standard which warehouse staff need to adhere to and which will help to keep the work environment tidy. Although the managers spot checks aren't in themselves a standard, they are also a control measure which will help to ensure the work environment remains sorted. And the last one, sustain. Sustain means to keep. Is also a part of self-discipline. This principle involves ensuring staff are motivated to continue to make improvements improvements, like to sustain at that level and not fall down. So once you're at that level of getting 80% of the success rate or 90%, do not look back, sustain that, constantly try to improve that. An important aspect of this principle is that the fact that staff should be motivated to continue looking for ways to improve performance. Although the manager's changes provides performance standard, they do not directly provide any incentives for staff to make further improvements in the future. And you have to give an overall gist of all the S rules that you have used, because you have to give a conclusion of that. So overall, the manager's changes will help to make the warehouse processes leaner and to help to reduce problems which had threatened TT's relationship with the major customer. However, they do not appear to demonstrate all of the 5 S principles, and therefore there is still scope for further improvement to make the warehouse process leaner. So what has happened is basically there is always a scope of improvement. It's not like it's done once, so that's it and that's the only improvement that is possible, and apart from that there's no improvement that is possible to like just move ahead. But there is always a scope of improvement, but these are the 5 S's that you can do in order to have a proper improvement in your warehouse system. Okay, so before we begin with the next question, we'll take a break of like 5 to 10 minutes. So we finished the complete mock. So instead of starting a new mock, I thought that I would, tell you to solve questions from the dashboard. Okay, so we logged in on the practice platform. I selected my subject from your APM, and from this category, I can pick any question I want. Okay, for example, I picked this one: Jensen, Levi's, and Webb. Okay, so I start the practice. This is the question. This is the appendix, the entire question. Okay. Now, the first thing that you have to do is read the entire question. So, this is a 25 marker. Okay. Wherein you have A, B, and C part. This is the appendix 1, extracts from the management account for the year ended. Can I zoom this? Now I think it's visible. Zoom it more. I think it's pretty visible. So these are notes for this particular appendix. And this is the question. So your requirement, I will read. Evaluate the comments of the export division manager that the net profit margin used to appraise her own performance should be different from that used to appraise the performance of export division itself. Then second one, recommend using appropriate calculations whether the manager of export division should receive her bonus for the year. And third, advise whether the use of EVA, economic value added, is an appropriate measure of performance of the two divisions. You are not required to perform an EVA calculation. So I would want you to first complete the B and C part, and then if time allows, we can do the A part, because the A part is smaller for 7 marks. So let's do the bigger one first, just because we have a limitation of time. So with that, let's read the question first. Jensen, Lewis and Webb. Company background and objective. Jensen, Lewis and Webb. If you have observed, this is a timed question. So it will show you in how much time you're completing the question. So make sure you have one eye on the time. Jensen, Lewis and Webb, JLW, manufactures tubes of acrylic paint for sale to artist and craft shops in K-land and C-land. JLW has two divisions, domestic division and export division, both based in K-land. All costs are incurred in K-land dollars. Domestic division is an investment center and sells only to customers in K-land. I thought this was the K-land and J-land question that we did, but this is different. Export division is a profit center and exports all its products to C-land, where customers are invoiced in C-land pounds at prices fixed at the start of the year. The objective of JLW is to maximize shareholder wealth. Capital expenditure. At the beginning of the year ended 31 December 2006, the head office at JLW purchased a new production machinery for export for KL 2.5 million, which significantly increased the production efficiency of the division. Managers at domestic division were considered purchasing a similar machine but decided to delay the purchase until the beginning of the following financial year. On 30th June 2006, the dollar KL weakened by 15% against the dollar SL, after which the exchange rate between the two currencies has remained unchanged. Current divisional performance appraisal. The managers of the two divisions are currently appraised on the performance of their own divisions and are awarded a large bonus if the net profit margin of their divisions exceed 8% for the year. Extracts from the management accounts for the year ended 31 December 2006 for both divisions are given in Appendix 1. On being told that she would not be receiving a bonus for the financial year, the manager of export division has commented that she has had difficulty in understanding the bonus calculations for her division, as it is not based on traceable profit, which would consider only items which relate directly to the division. She also does not believe it is appropriate that the net profit margin used to appraise the performance is the same as that which is used to evaluate the performance of export division itself. She has asked for a meeting with the directors to discuss this further. Basis of bonus award. GLW's directors intend to award divisional managers bonuses on the basis of net profit margin achieved in 2006 as planned, but have asked you as a performance management consultant for your advice on the comments of the export division manager in advance of their meeting with her. One director has also suggested that in future, economic value added may be a good way to evaluate and compare the performance of the two divisions. You are asked for your advice on this too, but you have been specifically asked not to attempt a calculation of EVA. Okay. So recommend using appropriate calculations whether the manager of export division should receive her bonus for the year. So that bonus calculation you can do. So I want to plan my answer. I will plan my answer here. So I have to do the calculation part, but here unfortunately they've not given me the Excel. So the Excel part of the answer I'll do here. Working note 1, which is controllable net profit margin. For export division for the year ended 31 December controllable net profit, and it is in dollar KL thousands. Okay. So for the export division, you have to calculate. So the reported net profit for the export division is 545. So reported is how much? 545. Add back non-controllable items like depreciation, add back non-controllable items like depreciation, which is how much? 395. Then allocated head office cost. HO is head office, okay? What is the allocated head office cost? 360. Then deduct currency gains. But do you have the currency gains directly given to you? No. They've given you some of the notes. So for currency gains will be working note, currency gains. Six months revenue from 1 July 2026 was increased and the currency gains was increased by 15% due to currency gains. So non-controllable currency gain was actually 15% more. Okay, so the current currency that we had the current currency for our particular thing was 6 months revenue from 1 July. The revenue was 8,000, but this is for the entire year. So for 6 months is how much? Half of this. So 4,000. But the gain was how much? 15%. So 4,000 divided by 1.15, that is 15%. So that will give you how much? 3478. This is the degrees. So gain is how much? 4,000 minus 3478. That is 522, and this is the non-controllable currency gain. Then that will give you controllable net profit. That will give you how much? 778. This is the controllable net profit. Next we are going to find out is what? Controllable revenue. Again, this will be in dollar KL thousands. Okay, so controllable revenue will start with reported revenue. Reported revenue is 8,000, we know, for the entire year. This we took for 6 months. 4,000 was for 6 months because we had to calculate since 1st July. So reported revenue is 8,000. Currency gains is deduction of 522 according to working note 2. Then that will give you a controllable revenue of how much? 7478 and controllable profit margin is therefore is equal to 778 divided by this into 100. If you do, it is 10%. Okay, so this much. So that is the controllable profit margin. So that finishes the B part, obviously with a certain theoretical part that you have to write. So how you arrived at certain figures, or what is your conclusion on payments of export division's profits, is what you have to write. Okay. But that theory part I'm not doing, I'm just doing the practical part. Proceeding forward, the C part of the question asks you to advise whether the use of economic value added EVM is an appropriate measure of performance of the two divisions, and you are not required to perform the EVA calculations. So in this particular part, what will you write? EVA as a performance measure for export and domestic divisions. So EVA, first of all, this is answer C. You write EVA as a performance measure for export and domestic divisions. Then you will start it off as EVA makes adjustments. Just to do B part, see how much time we took, and to read the question. 17 minutes 51 seconds, almost 18 minutes are over by just doing the B part and reading the question thoroughly. Now we are doing the C part. To the financial profit. So when you practice it here, you get a pressure of time also to calculate the economic value generated by each division and then makes a reduction for the COC, that is the cost of capital invested in the division. The positive EVA indicates a division is creating above those to finance the business. It is consistent with the objectives of the business. And what is the objective of any business? To maximize shareholder wealth. Then what else? Economic value added involves making many adjustments to operating profit and capital employed. These may be time consuming and be poorly understood by managers. The manager of export division is already commented that she finds the bonus calculation difficult to understand. And then what else can you write? Then I'm giving the main points that you will write. You will elaborate for it further, but I'm just giving you the headings of it. EVA, that is economic value added, somehow avoids distortion from estimates and financial policies, right? What else it does? EVA encourages to take a long-term view, because we did in one question short-term versus long-term, right? Then what else it does? EVA takes into account COC, cost of capital, right? So these are the points that you will consider for the C part of the answer. And the B part of the answer is written here, but the explanations we didn't write. Okay. So now once you're done answering the question, look at the time. It has been 22 minutes 48, so around 23 minutes. See how quickly the timer runs. So whenever you look at the timer, you feel a little conscious that I have to complete it in that time, and in this limitation of time I have to present the best of what is available with me. Like whatever is the best of things that are available with me, I have to present the examiner with that. Then when I confirm it, I review it. So the moment I confirm it, I get the right answer below my answer. So the A part we have not answered. The B part is, we got 10.40, which is approximately 11. Yes, so the answer is correct. Then the B part theory, which we didn't do. Now the C part. EVA as a performance measure for export and domestic divisions, avoids distortion, takes account of cost of capital. They've given only 2 points. We've written more. We wrote avoids distortion from estimates and financial policies, encourages managers to take a long-term view, and EVA considers takes into account the cost of capital. That is what we are asking. So this is your answer, this is their answer. Okay, so you have to review, you can review your answer from here and self mark yourself. Now how will you self mark yourself? Now pay a very close attention to how to self mark yourself, because a lot of mocks that you will solve or you will practice, you have to self mark them. Okay, so having completed this mock, take a few minutes to consider what you did well and what you found it difficult. Use this as a basis to focus your future study on effectively improving your performance. Common problems: did you miss out any question? If no, proceed further. If yes, you have to further emphasis if your answer is yes. If your answer is no, please go forward. So did you miss any questions? If your answer is yes, you really missed out some parts. Attempt all questions, all the requirements within each question. So that means your time management is weak. If you have missed out on any important questions, that means your time management is weak. So make sure you manage your time appropriately and you manage your time perfectly. Did you finish too early? If no, proceed further. If yes, that means you have not used the time appropriately. Maybe you have just quickly written the answers anyhow. If you have extra time and if you feel you have written everything perfectly and you're fast, it's well and good. Go to the question again. Do a little bit of beautification. What beautification you will do? As I told you, do this beautification if you finished so early, so it looks good. When you mark it, it looks good. Did you overrun? That means you couldn't complete the paper on time. Focus on allocating your time better. Practice questions under strict time conditions. The only thing of showing you this was, see, the timer has stopped now because you submitted the paper. So make sure you practice a lot of questions on the timed format, because the more you time it, the more you will get the time pressure and the more you will get the practice of solving the sums under the time pressure. Did you struggle with interpreting the questions? You remember on the first day I showed you the difference between define, evaluate, assess, understand, describe. So learn the meaning of the question verbs. That is, what does analyze mean? What does evaluate means? Key terms in the workbook. Read questions carefully, noting all the parts. Practice as many questions as possible. Have you observed the end line or the moral of the story of any sort of tip that the papers offer is practice, 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 solve mocks, practice, solve mocks. So the moral of the story everywhere regarding any instructions that any tutor gives you, the moral of the story is always practice as many questions as possible. Understanding the subject. Did you have problems in understanding the subject? If yes, review your notes or text. So go here. Go to chapters and review your notes well. Please do that. If you have a problem in this category, that is, if you have a problem in understanding the subject. Remembering the notes or text. Do you have a problem in remembering the notes or text? Quiz yourself. So go here, go to quizzes and quiz yourself. The solution to every problem is right there on ACCA Global Study Hub. Was your answer difficult to follow? If yes, use subheadings and headings. Use numbering sequences when identifying points. Leave space between each point. So this is the presentation that they are looking at. Okay. Did you fail to explain each point? If yes, show why the point identified answers the question set. Why did you fail? Did you not know that point? Please study well then. Did you include irrelevant information? If yes, then that irrelevant information is not going to give you a single mark. Just remember that ACCA is very strict in that aspect. Irrelevant information is not going to give you marks. Where some of your working is unclear, give yourself time and space to make markers' job easy. As I told you, don't irritate the examiner. So this is how your, the solving part should be. Clear, concise. So if the examiner wants to know how did you get this, it is the formula is written here. Okay. If the examiner wants to know, how did you get this, they have a formula. So like that, it should be clear. And that's it with marking yourself, that is the student self-assessment. And these are the common problems that student faces. So we thought of, talking about those problems. So guys, that's it with the mock, a practice question, a student self-assessment, and a lot of tips regarding the examination can be. The only tip I give my students is practice, practice, and practice. Without practice, nothing is going to happen. And the one more tip that I would want to give on the day of the examination to be incorporated is chill. Just remember that on the examination day, panicking is not going to help you guys. Like if you panic, you will not remember the answer. Rather, you will forget what you already know. So if you feel a particular point of the answer is difficult for you to understand, or you cannot interpret the question properly, or you're finding it difficult, just chill, relax from the question, answer and pick up the points that you know are very easy for you. Answer that part, make yourself safe, and once you're in the safe category of 50 plus, then write as much as you know from the points that you don't know. So that's the only tip that I would want to give is chill, relax on the day of the examination. Don't take a lot of stress. We have to complete the paper in the appropriate time. Therefore, stress is the last thing that you can think about on the day of the examination. Okay. I wish all my students a very, very, very good luck and all the best for the examination. And I know you guys are going to do amazing. Thank you so much for attending the 5 days of APM Revision Revolution, and see you guys for some other paper and the revision revolution in the next quarter. Thank you so much.